So today we're going to talk Palantir stock, and I don't own this stock, but I thought this stock was a particular one to learn a lot of lessons from. Some to do with the business itself, which I'll be talking about, and I'm not a shareholder in the business, I'm not a particularly big fan of it, and I'll mention why in this video I'm not a big fan of it, but as well from an investing point of view, I think there's many lessons everyone can take away from Palantir and some of the things that have been going on recently with this stock. So I hope this video is very useful for you guys. So panic selling Palantir. I feel like Palantir was a very popular retail stock, a very popular stock on YouTube. There was dedicated channels to this stock, and a year ago when the share price was going really well and things were looking up, it was a very positive, very highly talked about stock. Now 12 months on, I've seen a very, especially in the last earnings were key. Since the last earnings, I've seen the pendulum swing massive, and people have gone from very bullish in this stock to very negative on the retail space, selling out of the positions. Even the YouTube content creators that are very bullish on this have turned very negative, and a few of them as well selling out on it. And I wanted to talk about this from a Palantir point of view and an investing point of view, because I think there's key lessons here. Now, I don't think it's a coincidence that in this time frame, the reason why everyone's turned very bullish from this stock to very negative is because a year ago this stock was trading at $29 and now it's trading at $8. I don't think that's a coincidence at all, which we'll talk about in a second. So first of all, what I think a few people have been the victim of here is buy high, sell low. Unfortunately, a lot of people do this in the stock market. A lot of people start looking at what the share price is doing and not understanding the business. If you're a long-term investor, you're looking at the business. What's the business doing on the inside? Is the business fundamentally building up to where I want it to be going? Are they building up that revenue? Are they building up that profit or moving to profitability in this case, with it being a growth stock? Those are the key things you want to be looking at. And I think unfortunately people judge the business sometimes on the share price, and as well as that, emotions play a part. I think sometimes as well, particularly your emotions on a business can be, well, if the share price is going up, oh, it's a really good business, it's doing really well. Sometimes, and this happens in the stock market, which is sometimes a crazy thing and can create really good opportunities, is you can have a business that's doing absolutely amazing and the share price will drop. And sometimes that share price could drop by over 50%. Sometimes that happens in the stock market. That's the amazing thing with the stock market, is sometimes you get them disconnects. And if you start judging a fantastically good business that's doing everything right and start saying it's bad just because that share price is going down, you're not going to do very well. The key thing is looking and thinking, okay, the share price is this. Is this an opportunity? And the first thing that I think a few people have been sucked into with Palantir is they saw the share price doing well, people saying, oh, it's a fantastic business, oh, it must be a fantastic business because that share price is going up, and getting sucked into it, and now the share price is low, not actually looking at what's going on inside the business. And that's the first thing that I think a few people made the mistake on, is buying high, sell low. One of the big reasons why people lose money, even the big dogs on Wall Street, sometimes they do that mistake as well, and judging it by the share price. And the next thing is not understanding the company, and sometimes this is because people are sucked in because of the share price, which we just talked about a minute ago, but sometimes people try and cloud their judgment slightly and say, yeah, I understand it, I know what's going on, and not doing enough research into it, not getting to grips with the company. And this is one big thing that Peter Lynch taught me actually through one of his books, is that the best investors, and why sometimes the average Joe can be very successful in the stock market, and that's because they buy what they know. They buy products that they know, that they use. Sometimes they can be going down the high street, or potentially, just in the supermarket, you see this new brand, you're looking at that new brand and you go, oh, look at that, that product's selling really well, that must be doing really well. You go home, you try it yourself, you think, oh, it's a fantastic product, and then you go and research it, and you look at the business, and you look inside the business, you go, oh, it's an amazing balance sheet, it's got good profit growth, it's got good revenue growth. It could be a really investable company, this. And sometimes this is why the average Joe is so successful in the stock market, is because they buy things they use, they understand, they know, or not very complicated business. You look at some of the best performers in the S&P 500. Some of them stocks are very basic stocks, not complicated business models, products you probably use in your day-to-day life, and that's what you want to be invested in. And that's something that I've always stuck to myself. I've always bought into businesses I know, I understand. Sometimes I use the products, or even if I don't use the products, I try it before I invest into the products. And you will see that a very common theme in my portfolio is that the products that I understand or I particularly use, or I have knowledge that that product's doing really well. And that's one key thing as a retail investor to use to your power. If you start investing into businesses where you're trying to get around it, understand it, you're having to do a lot of research, you're still not sure on it, I'll tell you something, as soon as that share price starts dipping, you'll start questioning that investment and if you have the knowledge and if it's going to be successful, because you don't know. You don't have the knowledge on the business, you've not done the research, you don't understand the products, you don't understand the service, you start questioning yourselves. And the big thing is having that confidence in the business. You'll have a lot more confidence if you know the research and you understand it and it goes from 29 to 8 and you understand that business model and you've got a great understanding of it and it goes down. You'll do so much better holding it in the tough times because you've got the knowledge behind you, you've got the understanding, you've got the confidence to hold it. And I feel like a few people got sucked into that, not understanding the business, and now it's going down like, is this Palantir product actually going to be really successful? And that's one reason personally for me why I never bought into this business, is because I can kind of get my head around it, I understand the reasons for it, but because I can't try the product and I don't really have the insider knowledge of how successful that business is going to be, that's one reason why personally I didn't touch it. I just thought, you know what, it could be a great opportunity, you know, it could be fantastic in a few years, but because I don't have the confidence, and if it goes from 29 to $8, I don't know if I've got the confidence to hold it. And that's personally one reason why I stayed away from it. And the next thing is valuation. Now, for me personally, when Palantir came onto the stock market through the SPAC, I think it was like a year ago, maybe it was even a bit longer now. Time's going too fast. But when it came onto the stock market, for me, Palantir came on at a rich valuation. Now it's starting to catch it up slightly, but especially when it went to $29, I was looking at Palantir and I can't remember exactly, I think it was over a 50 billion company. And I was looking at this going, this is an insane valuation. And one of the big things you want to be doing as an investor is you want to be trying to buy a business that, let's say it's worth $10 a share, at $5 a share. That's one of the key things you want to be doing as an investor. The more you buy a stock that's undervalued, the more upside potential you get. Now, unfortunately, I do think some people bought this at a really rich valuation. It has gone down. Now, I know this is, you could say this about many stocks, especially growth stocks. There's a lot of growth stocks that are being killed off massively at the moment. And even if this was a decent valuation, it probably would have still got, you know, hit slightly a little bit. But I generally think that a few people got sucked into the hype and not looked at the valuation here and realized that this is actually a really, really rich valuation. And like I said, you know, growth stocks, a lot of growth stocks are down, so I can't just pick on Palantir for this, but I do think the valuation was ridiculous. Like, we've got to work out, okay, when I look at the profit in a few years' time, can I justify paying this valuation for it? Or particularly, like I said, actually when you look at it right now, it's undervalued. Never mind what it's going to be doing in the next few years. Is it right now undervalued? And that's a key thing to be doing. And give or take right now, even if it's down at $8 and you pay $29 for it, you're probably sitting down on a big loss. But the thing is now you're down at a big loss. Now you don't want to be panic selling, you know, you don't want to be buying high and selling low right now, because first of all, you know, you might pay a rich valuation. You've also got to factor in that we're going through a bit of a stock market crash right now, and that's also not helping the valuation. But one of the key things as a long-term investor is sometimes you just hold your hands up and go, you know what, I paid a bit of a stupid valuation for this. And you might want to, you know, move out of that position, or you've limited your upside in the position. But the key thing as a long-term investor is you go, okay, I'm going to reassess it now, because even if it's $8 right now, the thing is, as a long-term investor, you've got time on your side. So at $8 right now, when you factor in the revenue growth, say in the next 5 years, the profit growth in the next 5 years, that $8 stock could easily get back up to $29. And don't get me wrong, you probably underperform the market because you're getting out break even, but potentially that's better than selling right now at buying high and selling at 52 close. And that's one of the key things as a long-term investor, is putting time on your side. That's one of the great things that you can get out of sticky situations sometimes, is by, you know, being a long-term investor, and that you can actually still make a bad valuation work out in your favor. And the next thing, I just had to correct my spelling there, Analyst and 1Q. So I'm seeing a lot of people now automatically changing the judgment on this business off the last quarter. It seems like the last quarter was a turning point where people were very bullish on this stock and went really negative. And as well as that, I think another thing is that you can't judge a business off one quarter. I'm seeing this actually coming more of a common theme recently, is people are judging investment off one quarter. You can't do that, because in the one quarter, there's going to be sometimes a quarter where that business underperforms. It's not to potentially what you were hoping for. It's potentially not to what analysts are hoping for. But you can't judge a business off one quarter, because there's a lot of fluctuations that happen in one quarter. The big thing is you judge a company over the long term, because that's what you're investing for. So for example, you know, 1 year, let's just say the revenue is here, and then it goes to here, and it goes to here, then it goes. This is good progress in a business, and that's what you'll be seeing. And same for the profit, you want to see something very similar from there. The same thing happens is I see analysts do this, is sometimes, let's just say that an analyst expectation is here and it just comes below it, and the next year let's say the analyst expectation is here and it comes below it, and every year it's underperforming. But you'll still see the trend here is that this stock is still progressing very much in the right direction. It's just not meeting analyst expectations, and potentially analyst expectations, they've got it wrong. It's analysts getting it wrong. The business itself is still making progress, and sometimes the people get focused on, oh, you know what, it was 0.5 million out, it did 50 million in revenue, but it was 0.5 million out, and then it went to 75 million, or it was forecast for 75 million and they actually did 74.5 million, so it missed expectations again. Look at the long-term picture. Sometimes that progress could actually be very good progress and not just get caught up because it was just slightly out of where you were expecting it. You've got to look at long-term picture and make sure that that business is still progressing in the right direction. Now, don't get me wrong, it does help massively when your business is doing it the other way around and it is coming in above expectations and above your expectations. That's obviously where you get a stock that ends up overperforming your expectations and probably will give you more return. But sometimes people judge that a company because it's making no progress when it's only missing slightly, and you look at the bigger picture and it's still progressing. And like I said, in that time frame, if you do many quarters, there's bound to be one quarter where you come far below that expectation. Let's say it's underneath there, but as long as it progresses and makes it back up, you're absolutely fine. And sometimes I think people start judging a long-term investment. I think they get a bit impatient sometimes and judge it off the short term, which is a massive mistake. So with all that considered, I think that's what a lot of people have done here. A lot of people panic selling a stock like Palantir because they made one of these errors here. Now, Palantir could still be a very good business, and it's just one big thing that surprises me is the switch from such a bullish stock to such a negative stock so quickly. And I feel like the reason why quite a lot of people are doing that is because they've made one of these mistakes that we just covered through here. Now, the last point is the key one. Has something changed? Now, this is where I can understand people change their opinion on a business, potentially Palantir, and they move out of the business. If something has majorly changed with that business, that is 100% fine. But sometimes I think people automatically go, oh yeah, something's changed with the business, when realistically it's one of these that's gone wrong. Now, if something has particularly gone wrong in the business, potentially they are moving in a direction that you don't like, fundamentally with the business. Maybe there was a management team that changed that you don't like, and management are key to an investment. There's a lot of things, potentially making a move with a certain amount of debt to place on the balance sheet. There's a lot of particular reasons why you'd potentially move out of that business. One example for me personally, why I got rid of the business recently, it was 88 Holdings. Online business, loved it because it was online, great margins, and then it went and bought a struggling business, overpaid for it, and that struggling business is struggling for growth, went against the current business model, and I think it's going to make it suffer in the long term. And in fact, in the recent financial, it's already doing that. And that's personally for me why I moved out of that business, for example. But like I said earlier, the whole point in this video was not to go on that. It was to go with these points. And sometimes people making these mistakes and then going, oh, you know what, it's the business is not doing really well, when it's you as an investor that's making these errors. Now, I don't know if this is probably actually worth a separate video on its own, where you would actually look at something and go, that's actually changed with the business and I need to sell. But I just felt like this stock in particular, a few people were making their own mistakes and then blaming it on the business, which I think is key. So yeah, hope this video is useful. Like I said, it wasn't really a deep dive into Palantir, but more of the decision that people are panic selling, seem to be panic selling Palantir right now, and reflecting on, is it, a lot of people are blaming the business right now when it's one of these mistakes why they're panic selling, and they're blaming it on the business. And hopefully this video here today stops you from making one of these errors, and it might not be Palantir, it might be another stock that you own, or potentially a mistake to avoid in the future as well. So yeah, hope you enjoyed the video anyway, guys, and I'll catch you in a bit.